Hi, welcome to the Market Alert for Friday, the 9th of July 2020. So bonds were bid, break-evens break down as dollar, crypto and stocks skid. Another day, another post-European close, dip buying panic, but this time it failed to hold. Well, it certainly did in the morning session, but later on in the late afternoon, early evening, it managed to move back to the upside, no doubt in part due to the Plunge protection team entering the fray as well to try and bring prices back. Another interesting headline here as crypto crashes, Goldman buys Ether over Bitcoin, but gold best as cheap currency debasement hedge, and that's what the elite are doing at this time. They know that the best thing to actually own when it comes to the debasement of the US dollar is in fact gold, as it's always been. It is, as it says there, gold is a value buy. And interestingly enough, even though the price of silver is being hammered to the downside at the moment, gold is maintaining a steady ship, as you'll see in just a moment. But let's have a quick look through yesterday. We'll start off with the Dow. Let me just grab the daily chart. The Dow moving sharply lower, but nothing like the DAX, which we'll look at in just a moment. You can see their prices trading down to the low over here. So, you know, at the 89% retracement drawn from there to there, projected back to here. The market just ticking below and finding support at the 34,129. I've measured from this high to this low, projected back, and these are the upside targets. You can see the market currently trading at the 38% retracement of the daily on the overnight there. In the 30 minutes, it's a great chart, this, because it allows you to actually look and see what's happened in the last 24 hours. And yesterday morning, we can see the market selling off there very, very sharply in the Dow. But then as soon as we got to the cash session, which is the white area here, you can see that the market found support, and the Plunge protection team entered and brought the market back 50% straight away. So yeah, again, it's they're not letting it fall just yet. I suspect the market's going to continue to move higher, and you can see there at the moment very quiet overnight compared to yesterday. There's still a good range though of 200 points on the Dow in that range, which is always nice to see. Keeps the volatility levels nicely to the upside. In the 5-minute chart, just a quick look at the afternoon session. Again, you can see it was very choppy to begin with. They attempted to bring it back, and then we got into a sideways move there before prices actually broke to the upside, and then found resistance with a double top before moving back to the downside. In the DAX, I'll just grab the chart. Let's start off with the daily chart as well. Here you can see the market moving sharply to the downside yesterday. This is an 89% retracement. I'll just draw this in for you from this low to this high. So from there to there, and you'll see the market sitting on that 89% there before it started to move back off it. And you'll see that in real time when we look at part 2 of the alert. So again, like the Dow, the DAX is moving back to 38% of the move from this high down to this low, back towards the upside there. So we're quiet at the moment for the DAX on the overnight, just pulling back slightly there. Let's have a look at the 30 minutes in the DAX as well. We can see from the open prices sliding to the downside, and then finding some sort of support at the S3. 99% of the time the market will put in a stop at the S3 level. Overnight prices have just traded sideways, but we do have 100%, or just not 100%, sorry, over 100 point move back to the upside in the German DAX, back to the DP level there. Drawn in the fibs from this high to this low as well, and projected these to the upside just in case we have a move to the upside. I say this because on Tuesday the market moved to the downside sharply, and then they brought it back on Wednesday, even though they sent it south on Thursday. So there's been no surprise to me if they manage to bring this back today, which is why I've drawn the fibs on the upside. The low down here, yesterday's low, is the interesting one if the market decides to sell off further, which you can see there in the 30-minute chart. So that's the downside target. Upside target, we're at the DP, so there is a chance that the market could make its way back. It's a big move to the upside, but never discount it. They'll do anything they can to bring the markets back. So you can see there, you get a pretty good idea of how many points are in either direction. In the 2-minute chart, details overnight, so you can see that prices have moved to the upside there from the low down here, 15,350 BRN, through the 200 MA, sitting on top of that. Yesterday's close as well, and trading up to the DP level before finding some resistance and moving back to this psychological level here of 15,450, I think it is. Let's just double check that. Yeah. DAX and the Dow at the moment looking towards the upside bit of support there at the moment. Meanwhile, in the metals markets, silver coming under pressure still. They've managed to bring this back in the last half an hour from when I last looked at the chart. Takes a couple of hours to put the market alert together, so it's always interesting what I'm looking at, or think I'm going to be looking at in the chart when I get to it. You can see they've reversed the market here, which is interesting. So there you go. They brought it off yesterday's low. A bit of a sharp move back to the upside there, which is good to see, because gold showing a completely different picture. So in the daily of silver, sitting at the 200 MA and the 78% retracement there. Very good area of support. Still have an order down here to buy if the market does break the 25.50 level. So let's see what happens on this one. I'm just going to mark up the upside so that we can see if we get any sort of resistance in these areas, just in case they decide to bring the market back and move it up there. But we'll see. And in the dollar, this also moving up at the moment with gold and silver, which is slightly odd, but a lot of selling around in this market yesterday. Hopefully this is going to start to see this move back to the downside. There's no reason why this should be on the upside. We're up to nearly $1 trillion on the reverse repo market. There's that much liquidity in the banks. Wells Fargo made an announcement yesterday as well. They're not going to actually lend. They're removing the line of credit and all of their accounts as well, which basically is something that they do in the US and Canada, where you can actually consolidate all of your credit cards by taking equity out of the house. Just a quick survey, and then that equity is released as a line of credit. Insanity, frankly. But I know it's what's kept the Canadian housing market booming over the years, because it's one of perception, well, let's just increase the house prices and we can take the money out, take the equity out and use it as a line of credit. And gold, you see what I mean? This sideways compared to silver, which has come back down to 78% of its daily pattern. So a very interesting one here, unless it's the Basel III or the implementation of it, and you're seeing the gold contracts being removed to meet the criteria of only having the number of futures contracts for the physical instead of unallocated. So again, a very interesting picture there compared to the silver one, where they've ramped the market to the downside. Maybe it's oversold at this level then. We'll see again as it all unfolds, but interesting nonetheless. Okay, let's move on to yesterday's action. And we were already weak from the start. I said in yesterday's market alert that there was weakness around. How much weakness? Well, I was surprised by this as well, because the market certainly moved down in the futures session and already struggled at the DP. It was below the 3 averages, and there's a pretty good clue to start with, that there is a trend set to the downside. That's why I use these 3 averages. You've got the 200, that's the long-term average, medium term and short term, and we use the short term to manage the trade, the medium term as a way of re-entering trades, and then we've got the 200 MA, which is similar to using the DP level. Prices below tend to be short, above go to the long side. So the 200 MA and the DP are similar in this regard. So from the off, you'll see the market selling, and there's a pretty good clue. We're below the 5 bar, below the 20 bar, below the DP, below the BRN, below the 200 MA, and we saw the weakness also here. So the market is already indicating that it is short and it is weak. So the reason we don't get a signal to start off with is because we're already red in the MDI. Now, a thought has occurred to me that I should just actually reset this in the code so that it places a signal immediately depending on the previous color that we've got. So it's something I'm going to actually look at, because obviously if you're new and you're not aware of the setup of the averages, etc., it's very difficult to say, well, I can just go short from the open or long from the open if it's all green. But like I say here, from a manual point of view, you can see that we're already below all of the three averages and the DP level and the psychological level there. So the market is short from the off. So we see prices continuing to move lower, trading down to the S1, and then through the S1 you'll see this, and then we get a bit of support coming into the market. You can see the shorts taking profits here after the first leg down, huge volume there, and at the psychological level, and also the pivot of S1. You see the market bouncing back, and then as this is the interesting thing here, because what I've done is drawn in the fibs from this high to this low, and you'll see the market just under the 62% retracement and the 20 bar moving average and the psychological level. So you've got these things here indicating to you that prices could move lower. I then marked up a potential trade, and then also put in some downside targets, and I removed the sell area. Went short, market moving lowers, trading down to the 89, and then I've got the market breaking to the downside there. Now this is a very interesting price bar, because as the market broke down to the downside there, we can see that we've got this huge volume coming in and a tiny bar. It's a very tiny bar for a lot of volume, so I know there's some profit taking, some absorption of the sell orders coming in there. So at this point I decided to take the money off the table, and that was a 26-point trade off this potential re-entry. I'm just going to move this so it lines up again. So the reason for taking this trade, as you saw it was marked up, was purely and simply because the market had come back down, went up to 62%. In fact, let me just wind that back. There we go. Came back to 62%, and then I just tucked underneath and then took the trade to the downside there. And I do this a few times in the morning session. This is a very difficult thing to actually write in the software, which is why I'm spending the time just showing you the rationale behind it. We've already got that momentum here as well. And again, just to labour the point, we're short on the 200, prices are below on the 20, below on the 5 until we get a retracement there to 62%, and then the market then reverses off that area. And again, we see that support, again just highlighting this, and moving back up to that 20 bar moving average once more, failing to close above it, failing to close above the S1 as well. So again, we've got that situation where there's some resistance to the upside. The market moves to the downside. We see support at the 89%, and then prices moving lower, still below all of these averages. And once again, we get to the supports, and I'm just looking on the timeline here for you. Then we break that support and continue down to the low. And then as the market, I'll just come back to this again, notice the size of the bar to the amount of volume and the low. As I've said before, the low is really important. This is an area where the market will do its best to hold, particularly in a bull market, which we've just seen in the silver chart as well. Previous day's low is crucial if you have a bull market. So here we've got 45 points on that trade to the downside, and then we see the market put in a potential buy signal. It fails to hold. Again, notice that we close above the 20 bar but then reverse straight off this. Again, an indication that there's some weakness around. The market then gets into a sideways move, and we move to the upside. We've got resistance to the left here. We've got a major move to the downside as well. There is weakness in the market, even though we've got a double bottom here bringing prices back. So you've got to be wary when you get these moves to the upside. It's a dead cat bounce in its in a micro form. Prices try and hold, but watch the volume. This is key here, and again you'll see the volume is the same as the previous bar's range, but the bar is less in range. So we've got the same volume as the previous bar, and the range is less. We've got the resistance to the left, and we're at the scalp as well. So given this weakness in the background and the market having the resistance to the left, it was a case of take the small profit off the table, and there you'll see now that the volume is greater than the previous bar. The range is less, so that means that there is some selling in the up move. So the pros are in the process of actually switching the position to take advantage of further move to the downside, and that's what we see there as the market comes back, stops at the low. Again, look at this at the low. You've got that volume, there where the market is holding prices at the low. I'm going to speed up through this now. You can see how the low held there. I'm looking at the daily chart. I'll come back to that shortly. Look at that there at the low. And once again, we get another bounce off here. We've got the market also showing a 78% retracement from here to here as well. And once again, we've got at least 90% of the volume in this bar, and the market's not moving to the upside. As soon as what they were doing here was allowing themselves to bring the market back, and as it said in the headline earlier about trying to buy back the market and then it failing, and you'll see the market move lower in a moment. So again, I can see what they're up to, and then jump out of the trade, and then the market will start to move lower. You just see there sideways a bit longer, and then failing to take advantage, coming down to the 20 bar, moving back up, but failing to break to the upside. And then we get into the end of the morning session. Say there, because of the weakness there, I offloaded, and then eventually they were allowed to bring the market back to the downside. Once again, we see them do exactly this, as we've seen in all these other areas there and across here as well. So let's fast forward through. The market manages a bit of a bounce. Again, how important the low is, and how also from there down to there projected across will give you 89% there as well. So a bit more of a pullback there, but again, once we break the low and the pajama traders come on stream in the US, that's it. So we start moving to the downside, and notice again how the averages there switch. You've got the BRN through there, and now we're staying below the 5 bar moving average until here, and we've taken the low out. Once you've taken the low out, you will see the market accelerate to the downside as a rule. So again, support coming in at the S2, bit of through there, bounce through the 20 bar, but as soon as we close back through the 20 and the 5, we go lower. Again, you've got a re-entry situation there where the market then continues lower. See them buying back in and trying to hold the market. And I'm just going to fast forward through because we then get to the jobless claims. Here's the daily chart, and before the 89 was hit, and you can see how volatile the market was through this. I just kept watching the daily chart. It's fascinating to watch the bigger time frame. As we headed to the weekly claims, the market is brought back. Claims came out worse than expected, which allowed the market to come back once more. and you'll see there a bit of support. You'll also see from there to there, projected back is 78.89. From there to there, projected back is also 78% with the BRN above it as well, the big round number. So the afternoon session kicks off. We start to move to the upside, and immediately the market starts to see selling coming in, which you can see in the red bars there. Again, this is at 89% of this high projected and then projected back. This is another great area to get short, and I did an experiment actually as I drew these fibs in. You can see there I drew another set in from there to there, and when we got to the 89 decided to sell it just to see if I could find a newer strategy where we could actually reduce the amount of potential loss by taking advantage of the price action. So it's something that I'm working on at the moment. We then had an official signal, and you'll see again, look at this, you've got the narrower bar with the higher volume there than the previous bar, which indicates that they're actually stopping the down move. We've got the support to the left as well. We had a bit of support on that bar as well. So when you take all these things into account, the market starts to move back to the upside. So as the market was starting to show some strength, I decided to close out the trade and also the trade that I'd taken from the top as well. This producing a 40 point profit on this one that was taken from up here down to this level as well. So like I say, there's lots to come that I've been working on, and also adding it into the software as well, just so that we can take advantage. So there we see the market putting the reversal in, and this was interesting as well now because the market became sideways. There was a sell signal that wasn't filled, and then we got some more selling, and once again we've got all the averages in the right direction there as prices move to the downside, go down to the 89. You can see there, let me just recap this. You can see this small cluster here as you watch the market unfold. 5's below the 20, 20's above, and it's failing to close, so it's all red, and then the market starts to move to the downside to the 89 and also to the recent low. So there we go, and we go down to the S3. Now the S3 is very interesting. Again, you've got that increase in volume, narrower than the previous bar, so you would expect, given the same amount of volume or more, that prices would move lower if it was all selling, and if it isn't doing that, then there must be some profit taking or buying in that move. And that takes you to the low, I think, for yesterday at the S3. And as I said at the outset, that 90+% of the time the market will stop at the S3 level, and that's precisely what it did. And then the market trades sideways, waiting for the news. There is a short there, but you can see that we're already at 89% in the daily chart. So if we're at 89% in the daily chart, it's highly unlikely the market is going to move to the downside. And just to prove this, you will see in this current trade, the market just trading sideways there. And I, given the information that was in the daily chart, decided to exit out of this. And also we've got the news coming out as well, crude oil inventories, which do make a difference, because the greater the draw on the crude oil demand, then the more bullish this is. So the market's now stuck in this sideways move. Again, you can see what we saw earlier in this bar here, where you've got that spike in volume, some selling in this market at this level, and prices just trade sideways. So it was a case of, let's just see if we can get a few more quid out before we get the news. So there's the reaction to that, the market trading straight down to the scalp and then coming off it immediately. And then we've got the news coming out in just a moment. So this last signal here is unwise to trade, because you've got that impending news here. I say you always get out 10 minutes before the news as a rule, or if you're in the trade it's a bit different, but excuse me, when you're waiting for the news, it's best to stand aside, and then and that's the reason why. And then the figures were good, and we saw the market move to the upside there. Okay, this is a bit of a long one, but there's a lot of information here to cover from yesterday. There was a lot happening in the market. One thing that I haven't looked at today, if you're still with me, is the economic news. So let's just have a quick look at what we've got. So nothing in the morning session. Lagarde is speaking, and Bailey, and then it's a G20 all day as well. Okay, that's it for this one. Have a great weekend, and as ever, thanks for watching. See you in the next one.